Welcome everybody once again to yet another call, another exciting guest. And today we have none other than Mark. Uh, um, for people who don't know who Mark is the CEO of Smile Identity. I think for most of us, we are quite familiar with Smile Identity, but I think I'll let Mark, you know, introduce himself and tell us all about, Smile Identity. Hi, Mark.
Hi, David. Thanks so much for having me. So I am Mark Straub. I'm the CEO and founder of Smile Identity. Started the business about 6 years ago, and we provide identity verification solutions across the African continent and beyond its shores. We do so on any device, whether that's mobile devices, computers, PCs, tablets, anything with a browser. And we do this at scale. So we now have verified millions and millions, actually tens of millions of Africans across the continent, from East Africa to West Africa, South Africa, and even beyond. We have a number of verifications we've done on individuals outside of Africa. And we do this with just a selfie and an ID number, or a selfie and an ID card, depending on the country that a user is coming from. And we serve not only many of the fintechs across Africa, but now also a large number of the banks and other financial services institutions. And we also do some fun things like verifying people before they do a ride share or go on a date. So identity touches a lot of things. I'm really excited to be here with you.
Awesome. Thank you for that introduction, Mark. I think, like you mentioned, I think identity is such an important aspect of the growth of the ecosystem on the continent. And I think just to help, our listeners understand uh, why why is KYC important, I think it would be good to touch on that. And also, why is it such a challenge in Africa?
Yeah, that's a great question. So I'll start with why it's so important. It's very hard for businesses to do business with consumers if they are not sure who they're dealing with. And that doesn't matter if you're just showing ads or if you're just, doing general news and entertainment, but it matters a great deal once you start handling money, or once you start exchanging things of value, or start dealing in the physical world. So things that involve people's safety. And the problem when you can't easily identify somebody is that a very small number of bad actors can ruin things for everyone else. And this is, I think, the particular problem that Africa faces, which is where in other markets, more mature economies, let's say the US or Europe, or now even more recently parts of Asia, there have been over time layers of systems built up to verify different aspects of people's identity. So I did this one slide when we were raising our Series A, which showed that there'd been basically 50 years of investment in identity technologies and companies and databases in the United States, going back to really the 1960s and 70s, the rise of credit cards and eventually credit bureaus, and Social Security numbers, and eventually selfies and pictures of documents, and doing all that online and through your smartphone. But much of that really only started in Africa in the last 5-6 years since we started the company. And so there are not, 50 companies across Africa that have been building for 50 years various identity solutions. This is a relatively new phenomenon. And even the existing national ID systems, many of them have been underfunded over the years, or they've been out of date. So maybe a particular government builds a new ID card or an ID system, but it doesn't get updated or maintained well for 5 or 10 or 20 years. Or even sometimes they get replaced too quickly. So there's an ID card that gets issued to a lot of people, but not everyone in the country gets it. And then the next government takes power, and then there's a new ID card that gets issued, and the old ones become irrelevant, but they never actually get to full coverage of the population. So there are stats I've seen from the UN where, obviously Africa's got somewhere around 1.4 billion people, But there's at least 500 million people in Africa who don't have any form of ID. And there's probably another 500 to 700 million people who find it very hard to prove their identity because of the limitations of their ID or the quality of their ID itself. So that's why it's such a challenge. And if you can solve this problem, people are more comfortable transacting online, and businesses are more comfortable extending credit or accepting payments. And maybe the last thing I'll just say on this, there's an anecdote from when we started the company. Netflix wasn't available in Africa when we started in 2016. And it was mostly because they had a hard time verifying whether people were sharing logins and also being able to accept payments and doing any kind of subscription billing. And so those problems, they're partially payment related, they're partially login credentials related, but identity is sort of the underpinning issue for all of that. So now those problems are getting solved, and obviously we're seeing a lot more services being offered across Africa.
All right, awesome. I just if I can ask you to take us a little bit back, before KYC and now, companies like Smile Identity are solving this. How 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 was the market like? How are people solving that, the problem?
Yeah, before we started, I mean, there were solutions, but the solutions were limited. So one of the things you could do was ask a user to take a picture of their ID card and to take a selfie. There were some companies that provided this service globally. It was very expensive, usually $2 per check. So the economics of it didn't work for many services across Africa. If you're making a $5 loan, you can't spend $2 on an identity check. And then the other challenge was that the quality of the images or the size of the actual image upload that was required from a user was too big. So there'd be over usage of data, very expensive usage of data. And then if the images are not of good quality, when you upload them, you sort of have garbage in, garbage out. You can't actually make a decision. So the user gets rejected, and there's no joy for anyone. The other solutions that people were using were data related, but the data was very hard to access and oftentimes incomplete. So when we started, I was actually an investor in a couple of payments and lending companies that were doing business in Africa, and they would integrate directly into sometimes a telco, sometimes a national ID system. But those integrations would take sometimes 6 months, a year. They were very difficult to get done. And then when you actually started querying these systems, you often got back incomplete or incorrect data. So it was sort of an expensive, not particularly reliable, and very difficult set of solutions to work with if you were a developer. And that just meant, less companies actually could get off the ground because they didn't have the time or the resources to get these kinds of integrations working.
Indeed, for sure. I mean, now, obviously, KYC and identity are a bit of an issue. I mean, even with regulators, I know you have to work with regulators, of course, in Africa. How do you go about that?
It starts by building trust. We've spent a lot of time just talking to regulators. So I think the first year, all we really did was sit down and meet with government officials, in some cases bank officials, telecom officials, and shared with them how we saw the problem. We shared with them what we thought the potential solution was. And then we started talking through how we would do it, how the technical integrations would work, how data privacy would work, how security would work, the use cases and the benefits of being able to do something like this. What made it a little bit easier is we had an example we could point to, which was India. I'd spent a lot of time in India. I worked in India 15 years ago and again about 10 years ago. And I'd been part of the microfinance industry there. And I'd seen how things changed very quickly in terms of financial inclusion and digitization of the economy once there was a national ID system with the ability to verify somebody in seconds biometrically. So we had a story we could show and point to, a success story that had gone from, very challenging paper-driven processes that would take days to verify to digital, modern, biometric APIs that could verify somebody in seconds. And the adoption of that was tremendous, and it led to the growth of the the largest telecom in India now, Reliance Jio, and much broader adoption of internet and other digital services because people could instantly verify who they were and get access to things. And then companies were, of course, more comfortable issuing a payment credential, opening up a bank account, giving somebody a SIM card, making somebody a loan, because they had underneath this the basic confidence that this person is who they say they are. So that story, the story of India and Aadhaar, which is the national ID system there, was a story that resonated with officials in Nigeria, officials in Kenya. And over time, as they continued to invest in their own systems, they saw the same opportunities that we did. And we were able to partner with a number of these folks in order to create APIs, create SDKs, software developer kits, so that eventually our clients, who were many fintechs, many startups, and then eventually some banks, could make use of these APIs and do so in a secure manner and in an efficient manner. So that's a little bit of the journey, I guess, from the early days.
You work with many startups, obviously, on the continent. We are going to talk about the numbers later, which are, to be honest, quite impressive. Tell us, how do you work with startups? And while you're at it, you can let us know how many startups are you currently working with across the
Yeah, I mean, we were, we that's our roots, right? We were a startup selling to startups at the beginning. I think the first 20 customers we had were all startups, mostly fintechs in Nigeria back in like 2018, 2019. It started by spending a lot of time just talking to them and listening to what their needs were and iterating and trying to solve those needs. And I think, I guess I'm kind of speaking to founders now. I think like any founder who's tried to build something, you realize in the early days, you don't quite have the product you want, but you try to find pragmatists who are in pain. So the early customers of yours they're pragmatists. They use your product, even though it may not be everything that they need, but it solves the pain. So we had a lot of that. We had entrepreneurs who were willing to take a risk on us, and we did a lot of work to try to solve their needs. And I think over time, especially in the last 2 years since the Series A and now the Series B, we've made huge investments in our products, in our technologies to make them easier and easier to use. We've also started a new program that's specifically tailored towards startups, and it's called Smile for Success. And we issue free credits on our platform to any startups that qualify. And really, to qualify, you have to have a product that is actually in market where you're actually, getting customers. But as long as you've raised less than, I think it's $5 million. So, most startups are still in that phase where haven't raised that much money. We can issue you up to $6,000 of credits so you can get started on our products. And you can do so, without having to spend a lot of money. So you can get going and get a product in market and start verifying users, and hopefully get product market fit.
I know you guys pride yourselves by saying that, I like this statement, that clients can start using your service in under 4 seconds.
Well, I think that stems from two things. One, it's like, you can sign up for a demo with us instantly, and we'll get on the phone with you. But I think the other thing is that, once you actually integrate our stuff, most of the API calls are going to happen in under 4 seconds. So, rather than the traditional process where you ask people to share some information, then you hire some people in the back office and they have to go through it, and your onboarding may take 2 days or 2 hours, that can be an API call that just happens relatively instantly. And you can give joy to those users, opening up that account, provisioning that loan, whatever it is that you're trying to do, very quickly. We've noticed that's like many companies we've talked to, they're building a product, they're focused on their service. They're not focused on trying to build a KYC engine. So in the early days, they end up just doing all this stuff manually. And what we try to tell to them is like, there's a solution for that. You don't have to do it manually. You can automate it, and you can do so pay as you go, right? So we don't make you sign a big contract to get started. You can just sort of, if you want to use it $50 at a time, $5, 25 cents at a time, you can do it that way. 25 shillings at a time, you can do it that way. And even for early stage startups, we also will give you some credit so you can get going and you can get to your first 20, 30,000 users without having to spend money with us. So I think that's what we talk about when we talk about the speed is that you really can get started relatively quickly.
All right, awesome. Just to take you back, a lot of our readers and followers are, you know, founders, cryptocurrency exchanges, and other businesses in the digital asset space. Do you work with them as well? How easy
Yeah.
is it to work with you guys?
I think we probably work with more cryptocurrency companies in Africa than any other KYC vendor. It's not the largest segment we work with. That's probably digital banking and lending, and also some remittances. But we've certainly, not only do we work with a lot of companies in crypto, we've done it for a long time. So we've lived through sort of the regulatory changes and the seasons of change around crypto. Um, a lot of the things we've done kind of behind the scenes are to make it easier for cryptocurrency companies to operate with compliance. So I'll give you some examples. We have this feature we added called KYC receipts. So once you've completed a KYC verification on somebody, there's obviously a record in our system which you can access, either directly through an interface or through an API. But we also produce essentially like a PDF where there's a record of the transaction and the person. The individual's personal identifiable information is redacted, so it's not there, but you can see which checks we performed. And so if you get audited by a regulator and they say, wait, are you doing KYC? Who is this crypto user? Crypto user Bitcoin King 172, who was that? You have the ability to not only check your own systems, but there's a persistent record of that person in a PDF form that we deliver back either through the website, you can get it, or through an API. And that record shows what was verified, but without exposing all of the sensitive personal information. So you can tie that back to, okay, this user signed up at this date with this device. And if I need to go get the audit trail inside of, this cryptocurrency company's systems, you can find it. And that allows for, I think, crypto companies to be responsive to, law enforcement or to regulators as needed, without sort of hamstringing their ability to operate. So that's one example of how we work with crypto companies. Maybe just another one. And we talked a lot about Yellow Card, actually. That's a large customer of ours, and they're now partnering with Block, formerly known as Square. So that's a pretty significant set of use cases. They needed coverage across not just 2 or 3 markets, they needed like 17 markets. And so we were able to give them solutions that were high performing, not just in large countries like Nigeria or South Africa, but also in Cameroon and Botswana and Cote d'Ivoire and Senegal. Those are some of the markets where we're also seeing growth outside of Nigeria. And that's some examples of how we've worked with the crypto industry.
Right, awesome. Thanks for mentioning that. I think highlighting that is quite important to some of entrepreneurs and founders. Now, Mark, you guys have obviously achieved a lot. I've been following your numbers. It's impressive. You've hit milestones. Every time I go onto your Twitter, there's always an announcement. I mean, can you let us know, how fast you guys are growing? I've seen a milestone that you guys hit this week. Maybe you can start there, and then you can
Yeah.
let us know,
Yeah,
how
this
fast.
was almost, I mean, I knew we were growing fast because when we did our last KYC report, which we published in February, we were at about 50 million verifications we'd done cumulatively since starting the company. And the company, it was about 6 years old. But to put things in perspective, last week we hit 60 million verifications cumulatively. So, and now we're in April, right? February was only a couple months ago. So you can kind of do the math, right? We're doing millions and millions of verifications per month. I think there was a time last year where we were doing about 1 million a month. Now it's, anywhere between 3 and 5 million verifications a month. That's a lot. And just to put this in perspective, relative to the size of the continent, 60 million verifications over 6 years, that's like 10 million verifications a year, effectively. And that's also equivalent to about 4% of the entire population of Africa. So it is scale. And, when I started the company, I think I don't think we ever would have sat down and said, oh, like, like we'll get to 60 million verifications. I think we just obviously wanted to get to product market fit, right? Like every founder. But then things start to work and they start compounding. And then you realize that at one point in time, like you now are powering large portions of the internet infrastructure for the continent. And I think we take that responsibility incredibly seriously, but we also want to surface some insights, for the market. So obviously we do these KYC reports. We have a lot of insights we've shared there about industries that are more prone to fraud. Some interesting examples of places where we don't see a lot of fraud. You might have expected it, like onboarding for cryptocurrency is actually not that it's not that dangerous, not that fraudulent.
Yeah, we actually pointed that out in our blog last year. So thank you
Yeah.
for highlighting that. Yeah.
Yeah, I mean it's funny. We put together some interesting stats. This is a couple of years ago. There was a regulator in one country who was saying, crypto is only being used by people in the big city. Like no one's using this in the more rural areas. So like we should tax this heavily and we should, try to ban it out of existence. And there was a number of crypto companies that came to us and said, do you have intelligence that would allow us to make an argument against this? Because we have hypotheses that our user bases are coming from a wider swath of the country, but like we don't have data. And we were the only company that had enough comprehensive data on 6, 7 different players in that country where we could actually show that usage was happening in every single province or every single state in that country, and that the usage was actually pretty substantial, not just in the big cities, but also in the more rural areas. So that was a really interesting insight. But yeah, maybe just some stats. So 60 million verifications to date. Obviously, that has compounded. So we're now doing millions per month. Of those, we've approved about 3/4 of them. So 43 million approvals, about 15 million rejections, a couple of million verifications that either had to get redone or that failed because of downtime from an ID authority that we queried. And I would say the biggest sort of reasons for rejection are usually an invalid ID number. So someone either doesn't provide a real ID number, they provide a fake one, or they send us like 01111 or something. Other potential reasons, would be people actually trying to pass themselves off as somebody that they're not. So our biometrics catch those. And if we see that this face doesn't match the photo on the ID card or the photo inside the ID authority, of course, we reject those. We also have liveness checks. So when we see potential spoofs, somebody taking someone else's Facebook photo and trying to pass that off as them, we catch that as well. And maybe just some other stats I think are interesting for your readership, your viewership. Checks outside of Nigeria have grown 350% for us last year. And I think really interestingly is the gender equity question. So we historically had about 23% of the users that we were verifying were women, that we could figure out that they were women and we could estimate. And now we estimate that number is about 31%. And that has changed really just in the last 2 quarters. So that's a really exciting sign of better financial inclusion that's happening now across the continent.
All right, awesome. I mean, thanks for these reports. I think they also inform a lot of reporting. And then they are quite insightful. Mark, I mean, just while we are still there, where do you, I mean, based on the current growth of Smile Identity, how big do you think Smile Identity will be in the next 3 to 5 years?
I think there's 2 things that are coming. I think one is the rest of the world has woken up to the opportunity and also the needs of African consumers. There are hundreds of millions of Africans who are entering the workforce now. Their average age is, let's say, 19, 20 years old. 70+% of the population is under the age of 35. And these are all digital native consumers, right? They've grown up with the internet, they've grown up with smartphones. And so they can see what everyone else can see in terms of products and services that are available globally. and they have expectations to be able to access those kinds of products and services. So we're seeing very sophisticated digital banking apps that are launching, in Nigeria, in Tanzania and Kenya. And these are apps that are as good or better than things you'd find in the US or the UK or other parts of Europe. So I think the quality of products is definitely rising, and the demands of the African consumer are quite clear. And I think now you're seeing global companies begin to invest in that. So Bolt, which is a ride sharing company, has announced that they're going to commit $100 million to investing in Africa, and they're going to hire hundreds of thousands of drivers across the continent. That's a really good sign. We work with that company. There's also increasingly a push from the large payment companies like MasterCard and Visa to actively provide solutions. I mean, they've always been present on the continent, but a lot of the credit card transactions have been limited to 4-star hotels and maybe the tourist segment. And I think what you're seeing now is much broader adoption by the rest of the population. And that's happening because of partnering with fintechs that are issuing virtual and physical cards to people so they can buy things online, and a broader and deeper commitment to the infrastructure behind that. So KYC infrastructure, payments infrastructure, regulatory infrastructure. And of course, we're seeing, Google obviously continuing to commit, millions and millions of dollars, not just to infrastructure, but also to funding startups themselves. So I think these are all really good trends in spite of the near-term macro challenges. And so I like to say, and this is maybe a little bit of hope for the founders out there, there's two real things happening at the same time right now. One is you've got to pull back from traditional venture capital and private equity investors that are looking at the money that's it's no longer being given to them and is now being put into the public markets or put into bonds, because you can now get return on your interest rates. So that's making it more challenging to raise capital from sort of the venture capital type sources. At the same time, I think the underlying demographic trends in Africa, the population growth, the age of the population, the number of people entering the workforce, these are all very positive trends. So I think in the very, very near term, it's going to be challenging for startups to raise money. You got to do whatever you can to bootstrap, take advantage of free services like ours, like Smile for Success. Try to take advantage of things like maybe the other infrastructure programs that you can get that at a discount, and focus on your users and your customers. And I think over the next 2-3 years, you're going to see these long-term trends will continue to play out in Africa. We'll hit not just 60 million verifications. Hopefully we'll hit something like 600 million verifications at some point. And there will be tighter integrations between identity companies, payments companies, and even the regulatory work that's being done by governments, I think will be better coordinated, both across Africa, but also between the public sector and the private sector. So I think that's a very positive trend. And I think if you're a founder, it's a really good time if you can figure out how to bootstrap your company and make it through this next 12 to 18 months. I think on the other side of it, it's going to be it's a very positive future.
All right, awesome. Again, thanks for that entrepreneurial advice. I think all of us need it. Mark,
It's
now,
tough. It's tough for us too, right? I've been there. There was a time there was a time I was trying to come up with ways to keep the company alive, whatever I could do. And I think every entrepreneur, who's been at it for a while has those stories. So it's never even when you reach some milestone that looks like success, there was always, hours of pain and hard work and fear that was happening behind the scenes. And I think maybe just, some hope for your entrepreneurs out there that are watching, courage is not the absence of fear. It's moving ahead despite fear.
now, again, speaking to these entrepreneurs, Mark, um, when it comes to KYC, what level of KYC do you usually advise startups and companies to work with or to begin with? How does that work?
it's always it always depends on the products that you're offering. So if you're offering, a loan that is 1,000 shillings or 2,000 shillings, like you can't spend 200 shillings on a verification, right? You need to find a product that's going to be more tailored to that use case. Maybe you do a basic verification of an ID number or of a name, and maybe you're paying 20 or 30 or 40 shillings for that, depending on what you're doing, where you are. I think when you get into services or products where you're offering something of value, and the thing that you're giving away, whether it's a referral bonus, a loan, that thing would attract fraudsters because they might be able to sign up multiple times and get $5 or 1,000 shillings or whatever it is. That's when you need to start enforcing biometric checks. And so we generally think of like services when you start getting into things of value that are sort of more than $20, $30, it really does matter to have a biometric check on that product or service. Or if you're giving somebody a bank account, right, where they could be moving money in and out and doing money laundering, you want to do that biometric check. And then I think the next piece is it really depends on a mixture of what the fraud issues are that you're trying to mitigate versus the compliance issues that you're trying to solve for. So there's really two reasons to do KYC. One is because you're trying to stop fraud. And that's, fraud happens when you're giving money away or value away. It doesn't really happen when you're offering something that doesn't have intrinsic financial value. So like you don't see a ton of fraudsters like signing up for newsletters. There's limited value in doing that, right? But a lending app, right? It's like honey, right? It attracts the flies. And so I think that's where you have to understand the value of the product that you're offering, and then also understand the value of any kind of marketing spend that you have. So if you're spending like $1 to bring on somebody on board, but then that user's not a valid user, like every person you spend marketing dollars on that's not a real good user, it's like a loss of your marketing spend. So anything basically where you're putting at risk either marketing spend or a financial product of some kind, or maybe the actual safety of another person inside of your network. Like if you're offering some kind of a shared economy service, like an Airbnb equivalent, or a ride sharing product, you're putting somebody's physical safety at risk. You probably want to verify the driver, not just with a name verification, but also a face verification, maybe even a driver's license verification. And so those are the kinds of solutions that we offer. You can start with something as simple as verifying a phone number or checking a name against a database, or checking an ID number against a database. But the product that we would say is better suited to sort of the medium value type services would be including a face. And we've noticed, just as a reference point, we catch 50% more fraud when we do face checks. So there's substantial amount of fraud that you're not going to catch if you're not including biometrics.
So now, Mark, as we wind up, I would really like to take you back to entrepreneurs. You've raised funding. I think you're now in, is it Series A or Series B?
But we just closed our Series B and announced it about 2 months ago.
Yeah. So you raised Series B, you're growing, you're expanding. What advice would you give to other entrepreneurs, especially in Africa, who are seeking to raise for their startups, who are seeking to grow, or just enter new markets and just scale their business? What advice would you give that you've learned over the
Yeah, I
years?
mean, so two different things, I think, and obviously it depends on the stage of the company, but given that maybe we're talking to really early stage founders here, I think you need to assume it's going to be very hard to raise money for the next 12 to 18 months. And so I think the answer to that is not, oh, I just need to spend more time fundraising. I think the answer is you need to spend more time with your customers. You need to figure out what they want. The best funding you can get is revenue, not investment. So if you previously were spending like 1 hour a day talking to your customers, spend 2 hours a day, spend 3 hours a day talking to your customers. Figure out what is the pain for them. And I think like a great analogy people talk about is, are you selling a vitamin or are you selling a painkiller? Like vitamins are nice to have. A painkiller takes away people's pain today. I think that is really important to focus on. If you can solve for the latter, you find something that people are willing to pay for, they're willing to pay for today, they're willing to pay good money for, where you don't have to discount heavily. And that's really, I think once people can prove, especially in an environment like now, if you can prove that you've got customers that really are passionate about your product or service, that they're willing to pay you, that more of them are coming to you, that is what will attract investment. It's not the opposite. It's like customer obsession, great products that serve the needs of customers. If you can really solve for that and start to get that going, there will be money that is interested in investing in you. People will hear about you and they'll reach out. So that's what I'd focus on. Like last one on this is just, it's better to have 100 customers that love you than like 1,000 that have heard of you. So like, if you're having trouble figuring out who your customer is, like focus in on the ones who are spending a lot of time with your product and talk to them, go meet them, get on the phone with them, ask them what they wish your product did more of, ask them to tell their friends. And I think that is going to ultimately result in the best outcomes.
Thank you for that advice, Mark. Again, thank you so much for talking to us. It's always great to talk to entrepreneurs I always like to say who are setting the path for future entrepreneurs. It's really an honor that you're sharing this knowledge with us. For as we close, maybe for people who want to use Smile Identity or get started with some of the programs you just mentioned, maybe you can let us know where can they go to, where can they sign up?
Yeah, go to smileidentity.com. And if you are a startup early stage, check out our Smile for Success program. It's there under the company link. So if you click on smileidentity.com and then you click on company, you'll find the Smile for Success program. You can schedule a demo, click on the schedule demo button. You'll get on the phone with one of our teammates, probably within a day or two. And we'll take you through the products, we'll understand your needs, and we'll get you started. So that's how to get going. And if you are operating in one market right now and you're sort of thinking about operating in maybe 2 or 3 and you're not sure, the great thing about our products is, you could integrate our document verification solution and that works across all markets, right? So relatively easy to launch a bunch of markets quickly without having to do a bunch of local work. And maybe that allows you to test things out in different countries before you make a large commitment. So hopefully that helps.
Thank you so much, Mark, for speaking to us.